Okay, I'm live. Let's see if this actually works. I've got hopefully my better connection. I don't know if there's anybody out there. Let's try our test. Okay, says we're live. Oh, it's Valentine's Day. Nobody might show up. Oh, there's one person. How's my feed going? Is it smooth? Does it sound okay? Okay. Good. Great. Okay. So it's working out. There's 31. Okay. So listen, here's what happened. I'm doing there's 31. Okay. So listen, here's what happened. I'm doing a Q&A session on Vimeo, and power here just cut out. So I got back on, but the feed didn't, after trying for 20 minutes to get it back on, I decided, forget it. I'll just do it on YouTube. So I don't have my black screen, but I'm more than willing to answer any of the level 3 questions if anybody on the session was on the Vimeo session. Here I am, by the way. Look at that mug. Can you see that little guy on there? That was my friend. Passed away 2 years ago, but he's everywhere. Pictures everywhere. Okay. Do we have any level 3 questions I can deal with here? Because we have to do L3 tomorrow. Good. Looks and sounds okay. Yeah, I've got the cable in the wall, and from what I understand, there was a small upgrade. I'm still waiting for some routers, but we're on our way. Let's see. Do you need to state the POS for personal goals? If you're writing an investment objective, to achieve a spending or to achieve this level of spending or to this disbursement in so many years, yes, you do need a probability of success. For individuals, we don't state risk in terms of standard deviation. It's in terms of probability of success. So yes, you do need to state the probability of success. Yeah, I think it is. Oh, somebody is asking where my session here is. I'm going to send them over to YouTube. Hang on a second here. LinkedIn. YouTube. Hang on a second here. LinkedIn. It's on YouTube now. Okay, let's see what else we got here. Grinnell-Kroner model and how best not to miss the questions. Grinnell-Kroner is a short-term model. Okay, so look at the question. If it says, if it's asking for a long-term expected return, it cannot be Grinnell-Kroner. Short-term is Grinnell-Kroner. There will not be a missing variable. So if you're looking at all the variables that you have and you say, well, I don't have this particular variable, then it's a good sign it's not Grinnell-Kroner. You won't have to make an assumption that one of the variables is just zero. Either you'll have them or you won't. Now, if it looks like it's nothing but Grinnell-Kroner and you're missing a variable, that means you probably have to build that variable. You're missing something else. So if it's so obvious that it's only Grinnell-Kroner, or they're saying use Grinnell-Kroner according to Grinnell-Kroner, and you don't have all the variables, there's a high probability that you have to build one of the variables. Let's see. Good. Should I adjust the probability of default for the period in the expected excess spread formula? No. Usually, usually the probability of default would be constant across the time period. So if you have a holding period of 1 year, unless it specifically says that there's a change over the period, that there'll be a change in the probability of default. If you can give me an example of a question, I could probably answer that better. But to adjust the probability in the expected excess spread form, expected excess return formula, not unless it says so. Mach 5 AM 3 AB. Why is the difference between cash flow yield and yield to maturity? What is the difference between a cash flow yield and yield to maturity? And can we use the answer to B for A? Oh, I think I know that question. Okay, so that question, I think, gave you, it said there are three portfolios, and it gave you portfolio statistics. But in the upper part, it said what we know about the immunizing portfolio is it had weighted out. It gave you two weighted average statistics, but the exhibit only gave you portfolio statistics. What you had to pick on was there was an upward sloping yield curve, and when there's an upward sloping yield curve, the portfolio statistics will be greater than the weighted average statistics. So you just have to look at what the weighted average cash flow was and figure out which of the portfolios it would have been and what the weighted average duration is. You could have eliminated one and another, or the question B said demonstrate that there's only one immunizing portfolio. You could have used the Macaulay duration formulation, showing that A was the only one that had the same Macaulay duration. Yes, you could have done it the same way. Oh, my neck is sore. Why do we have to write the formulas for answers for L3? Do we have to? No. There are no points for writing the formulas. None at all. Don't even bother. Variables in place, but I don't write out any notation at all. Most important thing to do for the last 2 days, lean in. Keep doing questions and mocks, or read a review material. Yeah, I don't know that I would. I don't know that I would still be doing mock exams with 2 days to go. I'd probably be reviewing, and I think that I would have a good idea of what I need to review by this point. Should I read the GIPS for firm full book? No. You mean read the standards, the full standards? No. Just the sections that were highlighted in the reading, which is minimal. I think it's 50 pages. It used to be 100. Oh my! I've been leaning forward all day. It used to be like 100 pages. It used to have a whole bunch of technical detail. Then it got scaled down to, I think, 50 pages. It's light. It's really light. One-day review videos. Oh, just lost all that. Let me find it again. One-day review videos, one-day rest and chill. There you go. If you're still having screen recording issues, give OB. I won't have any more screen recording issues. It was only when I went back to Canada. I didn't have this setup with this Syntec. But I have this now, so it'll be back to the normal thing. I didn't have. It was only with Vimeo. I tried it twice. The Vimeo app that records your screen, and both times the video and my voice got out of alignment. So my voice is going along, but the video is just not following along and gets further and further apart. Vimeo sucks. Vimeo sucks. Period. Vimeo sucks. Fund to funds are preferred because of ability to shift allocation, netting of fees. Multi-strategy benefit only less operator risk. Trying to figure out what exactly the question here is. Well, multi-strategy is the same operator, right? Just running multiple strategies. So if you can ask me in a different way, because I think I'm missing where the question is in there. Do you give private sessions? I'd like to have an hour private session with you for L3. Not really. It's just a question of time, how much time I have. No, not really. Fund to funds are preferred because of Billy. Oh, I already did that. $65 to $68 on my mocks. Is that a low score? No. Cannot seem to get 70%. Don't worry about it. It's not a low score. Not a low score. I mean, obviously higher is better, but I wouldn't get too concerned about that. Any tips on how to prepare with a full-time job sitting for L3 in August? When you're going to have to make time, right? It's your last exam. Think about it that way. This is it. You got lots of time, 6 months, but you're going to have to make time for it. There's no magic pill on that one. Barbell portfolio has the highest convexity compared to a bullet and laddered for the same duration. You can't just say barbells have more convexity than bullets. You have to add for the same duration. Otherwise, it's not a true statement, right? You want to make it true, you have to say for the same duration. A laddered PF has dispersion across all the curve. Which of the two would best protect against structural curve risk? For structural curve risk, it's the latter, obviously, but I don't know what that has to do with convexity. We're talking about convexity. We're talking about rates changing significantly, or rates changing by more than 25 or 35 points on either side. Structural risk is the yield curve changing in a non-parallel way. So the latter would best protect you from that, from structural risk. That does not mean it outperforms, by the way. So let's take a curve that looks like this. Actually, we'll make it flat. I'm going to try to see how I can do it on your end. Okay, so it would rise this way, left to right. I'm trying to look at the XY coordinate on screen. And so this shifts up and down. For that's just duration. You're either leaning into duration or you're leaning away from duration. This is this way. This way here is steepening. So let's say that you had a decrease in rates and a change in the shape of the curve that looked like this, right? So you have a whole bunch of different structural risk. The barbell is better positioned to protect you across the curve, but that doesn't mean you'll outperform, because what if in your barbell portfolio, notice how this way here, I got to reverse it, how the long end went way down. Well, what if you were really just overweight the long end? You would have outperformed. So when we say protects from structural risk, that doesn't mean it outperforms. It just protects you better from non-parallel shifts, so that you're not potentially overweight the bad part of the move, or underweight. You're not massively underweight the good part of the move. I hear you saying that 2 bullets are more than enough to justify. Yeah. The questions is here. I'm marking the answers. I'm very long. Okay, so the answers, the model answers that you're going to see are exactly that. They're model answers. They're meant for the grader. In the model answer is the message that the grader should be looking for. The grader's not grading your words. The grader is grading the message. There are many ways to say the same thing. So it cannot be the case that everybody uses the same words. It simply can't be the case. But everyone should get the same message. The model answer tends to be longer so that the grader is reading it, says, okay, I got all the bases covered. I see where you're going here. And then can read your answer and say, okay, you got the same message. You may not have used the same words, but you have the same message. The grader is grading your message. So a nice little rhyme that you can say to yourself, it's not the words you say, it's the message you convey. Don't fret about, should I say this word? Should I say that word? It's the message that's important, right? When it says determine, justify, and there are three options, let's say, do you have to explain why the other two options are not correct, or just focus on why the option you chose is correct? So if it's one characteristic, if I say, here are three portfolios, which one is the optimal portfolio? And you say, well, it's portfolio one, it has the highest Sharpe ratio. You don't then have to tell me portfolio two does not have the highest Sharpe ratio, and that portfolio three does not have the highest Sharpe ratio. It's implied in the first statement. You've justified and explained. In other words, I could have asked you to justify, I could have asked you to explain, I could have used either word. But let's say that you need three characteristics for something. You need to immunize a stream of liabilities and meet the liabilities when they come due. Well, we know the market value of the assets must be greater than or equal to the market value or present value of the liabilities. Let's make it multiple liabilities, so then we can say that the basis point value of assets must equal basis point value of liabilities, and convexity greater but minimized thereafter. And let's say you forget one. Let's say that you totally forget the convexity part. So there's only two that you remember. And you choose portfolio A because you say, aha, A has more market value on assets and liabilities, and they have equal basis points. But let's say B has the same thing as well. You've explained why you've chosen A, but you have not justified why you've chosen A, because justify means you had no choice. Justify your actions means you had no choice. Not explain yourself, justify. Because you forgot the third variable. So yes, it's true that A had two of the characteristics, but B also, you could have chosen B and said the same thing. Now, if B did not have the convexity issue and A had it, while you chose A and you got A right, and while you explained why you chose A, you didn't justify why you chose A, if you get what I'm saying. Now, as you're going through each one saying, well, market value of assets greater than liabilities, you're probably looking at all three going, well, that gets rid of C and this one. If you're doing it anyways, if you're saying it in your head anyways, write it down. Condition number one, market value of assets greater than or equal market value of liabilities, eliminate C. Condition number two, basis point value of assets equal basis point value of liabilities, eliminates B. Hence it's A. Or if you can't eliminate it on that, then go to convexity. Convexity of assets greater than convexity of liabilities eliminates B, must be A. That's an airtight justification in 3 bullet points max. It's just as few words or just as many words or just as long or just as short an answer, however you want to say it, as just sticking with what you've got. But this way here, you've justified. So I hope you can see the difference between explain and justify. Why do we not put the highest taxable income? Someone's trolling me again here. Come on, man. The highest taxable income in a tax deferred account. Okay. Let's say that you have you're putting an asset in your hang on. Why do we put the highest taxable income? Okay, the highest tax. So let's say that you have a choice for your tax deferred income. You can put interest, securities that produce interest in your tax deferred account, or securities that produce dividends. Dividends would be taxed at a lower marginal tax rate than interest. When you put it in your tax deferred account, what you're saying is, yes, I know that I can, when I generate dividends, I have a lower tax rate, but I'm good paying a higher tax rate on it. Thank you very much. Because anything you make in your tax deferred account is taxed at your marginal tax rate. So why would you make any kind of tax advantaged money only to pay your marginal tax rate on the way out? So in your tax deferred account, because you got to pay tax on the way out at your marginal tax rate, there really should be no motivation to put anything in your tax deferred account other than anything that would have been taxed at your marginal tax rate anyways. Otherwise, you're simply just agreeing to pay more later on. Why would you do that? Right? Why would you consider that? And if you're putting equities with dividends, you're going to get some capital gain, which is treated even better. So you're saying, whether I make capital gains or whether I make dividends, I want to be taxed like it's interest, because you're going to be taxed on the way out. That's the point. It's, why would I give the government any advantage on this? It's tax deferred. That's my advantage. Why should I offset my advantage with boosting the type of income I make into a higher tax bracket? So you're going to have a bond allocation in your portfolio. If you think about your entire portfolio and you optimize a portfolio, then you make the asset location decision saying, okay, well, I should be 20% bonds. Let me put as many bonds as I can into my RSP. Why? Because bonds have no special tax advantage anyways. So if I'm going to be taxed at my marginal tax rate, I'd rather earn income that would have been taxed at my marginal tax rate anyways, so that I get the one benefit I can get out of the tax deferred account, which is deferred tax. So now I'm making a return on the component of my return that would have gone to pay taxes. I hope that settles it. Where were we? For a reserve fund, do you want a large percentage of the allocation in foreign debt? What else would it be in? We're talking about, when you talk about reserve, you talk about a central bank, or you talk about a sovereign wealth fund? Like, for the reserve fund, which, or do you mean for insurance company for a reserve fund? I guess I'd have to clarify whose reserve fund are we talking about here? Is the only rule for contingent immunization market value? No, you don't even need the market value of assets to be greater than the market value of liabilities. For the basic, for just a general basic approach, if you have more assets than liabilities, contingent immunization is a go. Go ahead. If that's what you want to do, go ahead. But you don't need more assets than liabilities to get that done. You just need your assets to be above some threshold level, and that could be some regulatory funded ratio, which might be 95%, might be 92%, or you might be willing to make some kind of, you're the sponsor of the fund, you might be willing to make some contribution. If the funded status gets to 90% of whatever liability that you're trying to immunize, and you're at 97%, you're saying, you know what? Why don't we lean into risk here? We have a good market in front of us. Interest rates are low. The central bank's not going to do anything. Growth is increasing. Credit's expanding. Like, why not take the assets and lean into this? And I'll tell you what, if it gets to 90%, let's just flip over to immunization and I'll increase my contribution. So the threshold level is 90%. So you would pursue active management until the assets fell to 90%, then you'd flip over to immunization. That's why it's called contingent immunization. Immunization is plan B. So in a very basic sense, yeah, if you have more assets and liabilities, it's not a question of whether or not you can do contingent immunization. You can. If you have less, the question is, well, what's your threshold level on the assets? And as long as the assets are above some threshold level, off you go. You can do it. What's the benefit for multi-strategy? They can for multi-strategy, you can utilize cash better. So let's say you have 3 funds and you have to keep some kind of cash reserve, let's say 5%. If you have a multi-strategy account, you can have cash collected in a different account and utilized for all 3, as opposed to each one having their own cash balance, right? You can also hedge out a lot better, because let's say strategy 1 is doing something, strategy 2, strategy 3, and in their strategy, some of those positions net out. So that if you had to hedge a currency, for example, across 3 strategies, you might find that you have some cross hedges already going on, that this, one portfolio is long a certain currency, another one is long a different currency. There's a correlation between those currencies that you can calculate, so that you don't have to hedge out everything. So there is some benefit at the macro level to managing risk and liquidity. Would you advise someone? I just lost that question. Would you advise someone? Where is it? To get zucked up? Zucked? You crazy kids and your words these days. Zucked up. Would you advise someone to get zucked up to prepare for level 1? I don't know what zucked up means. So let's ask the crowd. Should this guy get zucked up? What should get zucked to prepare for level 1? Is that like a Mark Zuckerberg thing, or I don't know what that means? How many mocks do you recommend? I don't know if I have a recommendation there. Enough for you to know where you're strong and where you're weak. I'm about average in the mocks compared to my peers. Should I worry? No. Do you think course mock takers are not representative of the average candidate? No, it's I write them needlessly difficult. I shouldn't say needlessly, but I write them difficult on purpose, because I think, what's the point of easy questions, just to make you feel good? That's what your parents are for. If you have a weakness, let's uncover it, so I'll push you a little bit and let's see what we can uncover. All the questions and all the answers for any question I write are right on the pages of CFAI. I'm not bringing new information in that you didn't know. I'm not, digging in other textbooks and saying, here you go. Oh, I know it's not in the book, but you should know. I'm not doing that. It's all right on the pages. It just might be 3 cognitive steps away. The exam will be 1 or 2 cognitive steps away. Every question will be 1 or 2. Because once you start getting the 3 and 4 cognitive steps away, it's difficult, brutally difficult, to write an SR question that has only 1 answer. The more cognitive steps you introduce, the more possible branching there could be. So there could be multiple answers that you're not aware of. So to make a tight question, because structured response, the response has a structure, and it must be 100% probable that everybody can get the same answer. Not with the same words, but they must be able to get the same answer. The more cognitive steps you have, the more branching you have, the more difficult it becomes. So mine have 2, 3, sometimes 4 cognitive steps. Well, great. If you can solve 3 cognitive step questions, 1 or 2 cognitive steps should be easy, right? But again, I don't leave the pages. I just make them hard on purpose. So it could be that you're scoring in a very tight cluster, which is okay. I'd say whatever score you get, go ahead, add 10 points on. That's probably more representative of where you'd be if I asked questions that were 1 or 2 cognitive steps away. Tutoring sessions 55 per hour. If you were to give it, how much would it be? A rough figure. I'm assuming 250. No, come on now. Come on now. I have never done that. I've never ever once set a price based on value. It's always based on cost, and I've always tried to maintain accessibility. At 250, that would be I don't know that I could sleep at night charging $250. No. If I did, it would be the same 55 an hour that everyone else does. I wouldn't do that. Yeah, it's not a question of 55 is not enough. You got to give me 250 to get out of bed. It's not what I'm saying. It's I just don't have the time. I don't have the time at all for one-on-one sessions. They're well, they're not very scalable. Number one, they're just not very scalable. So that one's a tough one. But no, I would never do 250. It's just not. It's not my style. I'd never do it. If I, I have thought of this for doing one-on-one sessions, because we're not doing the hat sales anymore for charity, and I don't control the logo anymore because I sold the business. So none of this belongs to me. So I can't just print more hats and start selling them. But I did think about doing tutoring sessions for charity, where you would have a tutoring session with me. You'd pay 55. I'd match it for 55. Would have some target, and this way here we could still raise money for charity without infringing on somebody else's logo or copyright. I thought about doing that, but in no way would I charge 250. So I might do something like that as we get closer to Christmas time, rather than do a hat sale. Well, it couldn't be Christmas time because you have the November exam, right? And that's only level 1 and level 2, not level 3. I'd have to think it through a little bit more. But if I did do it, it would be for something like that. For surplus optimization and hedging return, they both work regardless of funded status. Yes, you can. We have this idea that surplus optimization or hedged return seeking must be a fully funded status. Fully funded is easy. That's easy. Sure, go right ahead. But it doesn't have to be. Let's say that you're 90% funded and you say, okay, well, look, let's hedge out 80% of the liability right now. Let's take the other 10% and let's see if we can't grow it. Let's take more risk with that. But let's at least lock in 80% of the liability. You can do that. You can do that. Sure. For surplus optimization, the higher the level of risk you take, the more it approaches an asset-only approach, the more it looks like contingent immunization. So at higher levels of risk, surplus optimization approaches contingent immunization, which is an asset-only approach. But the two-portfolio approach wouldn't get there. But you can have any funded status as long as you have some threshold level. As long as you're above some threshold level, so you know what your knockout scenario is. And as soon as the assets hit that threshold level, that's called the knockout scenario, you're done and you flip to whatever your other plan was. How many hours do you recommend to pass L1? I don't know what the hours are. Hours are not a fixed thing. Hours are a variable thing. A variable thing based on other fixed things like your innate ability. We all have a distribution of innate ability. The lower your innate ability, the more hours you're going to need. The higher it is, the fewer hours you're going to need. So it's not a function of how many hours you need. You need as many hours to know it. If you're extremely gifted, you need fewer hours. If you're closer to average, you need more hours. If you're somewhat below average, you need even more hours. And I don't think it's linear. I think as you get to average and below average, I think it's exponential. I think you need exponentially more time. Come back to Brampton. We miss you. I was in Brampton yesterday. Had Starbucks, and then I went to, and I tell you, if you have a chance, go to this place called California Sandwiches. I had the veal. It's $13. My God, was it good? I mean, $13. I thought, you look at it on the board, it looks like a hamburger, like a veal hamburger. It's like, it's like, oh God, when did food get so expensive? $13. But when you get it, oh my God, was it good? California sandwiches, if anyone's ever had any of those, the veal is really good. But I was in Brampton for a few minutes. A few minutes. What is a great general structure to answering determine, justify? Okay, so determine is your multiple choice. I mean, that's just like, I mean, you know how to do that. Any other answer you have, whether it be justify, support, explain, always has the form. The case said this, number one, and it means this. You don't get any marks for saying the case said this. Repeating case facts are worth nothing. You must say the case said this and it means this. When it says repeating case facts aren't worth anything, that does not mean you don't repeat a case fact. It means only repeating a case fact is not enough. And everything flows from the narrative. If you cannot point to the words on the screen, you have no answer. You can't make shit up. You can't bring stuff into the answer that doesn't exist. You have to be able to say, you said this, and it means this. That's why I chose this answer, because you said this, and it means this. If you can't say you said this, you can't say it means this. That's an easy way to keep in line whether or not you're answering the question being asked or you're just making stuff up. Let's see. Oh, yeah, okay. Somebody's pointing out that I was being trolled on. Okay. For the performance evaluation reading, would we be expected to actually calculate variables like downside deviation? Probably not. So calculating is a level 1 thing. We did all that in level 1. This is a level 3 exam. You're not going to be asked to do something that you did in the previous exam. There just isn't enough time. With everything that could possibly be asked, there isn't enough time for me to test you on level 1 stuff or level 2 stuff. You may be given a scenario and asked, what is a suitable measure? And that may be one of the suitable measures to use. You would be asked about it in context. Something more conceptual, but no, not calculate. Level 1 and level 2 candidates have some respect and leave the chat for level 3 questions. We have exam this week. Yeah. Sovereign Wealth Fund. Oh, that was for the reserve fund, Sovereign Wealth Fund. And it was about, would they have a high allocation to foreign bonds? No. Just reading an email. I don't have a good argument of why it would or why it wouldn't. I don't even know if that's really a question. I mean, it's a reserve fund. I imagine it would optimize just like anything else. And if there's an international, you could make an argument saying that there's so much exposure to the country to begin with that having more exposure to the same country offers no diversification potential. So you could make that argument. I usually compare myself with a friend who cleared all his levels first go, unlike me, I failed 2 times. How can I stop comparison to affect me? How can you stop? You stop. I mean, it's good to have role models, but really, as far as comparison goes, the only thing you compare yourself is to yourself at some point in the past. And if you're making progress, you're a winner. Don't worry about other people. Other people have have different starting points, different motivations, different skill sets. Who cares? Who cares? I mean, if I learned piano and I was 10% as good as Beethoven, I wouldn't beat myself up. I wouldn't say, oh God, the guy's so much better than me. Seriously. I mean, I wouldn't beat myself up. I'd just say, am I a better piano player than I was 6 months ago? If the answer is no, then it's time to quit. If the answer is yes, okay, well, I'm a winner, you know? All things equal, when there's a parallel shift upwards in yield, why do we choose a bond with higher convexity? I thought since it's a parallel shift, we would look at duration versus convexity. I don't know if you see that, but the lights are flashing in here like the power wants to go off again. If the power goes off again, give me like 2 minutes. I will restart this session, okay? If the power goes off again, because the winds are fairly high out there, and I'm still waiting for my backup. I got I think it's a 3 or 4 kilowatt battery backup coming. Wasn't cheap. You'd think 3 or 4 kilowatts would be cheap. It's not cheap, but I got that coming because I can't take this. It goes out and comes right back on, just to piss me off. So rates are going up. Now, when we say more convexity for the same duration, okay, it's not just let's throw convexity in there. If you're an active manager and rates are going up, pull your duration in, or hedge your current duration by going short to pull your duration in. Use derivatives, whatever, but get your basis point value down. Just do that. But if you have a benchmark and you have constraints around that benchmark where you can't really play too much with duration, your benchmark's duration is 6, and maybe you can go to 5.8. If you can only go to 5.8 and that's as far as you can go, well, what else are you going to get to beat the benchmark? That's where you can reach for convexity. Say, well, I should be more convex. At least I may not be able to get my duration where I want to be, but I could be more convex for the same duration. You can't think in absolute senses. You must think in relative senses when we're talking about something like that. But for the same duration, yes, you would want more convexity. Yes. Big recommendation, passing. I just learn, memorize everything in the curriculum. For determined questions, do you need to explain your answer? If it just says determine which portfolio, determine is a multiple choice. You just no. Pay attention to the keyword. If it just says determine, you probably won't have an answer box. You'll just have A, B, C, whichever of the, well, if there are 2, 3, 4, 5 options, I don't know. But a determine is just pick, right? How do you keep high touch principal and high touch agent straight in your head? Well, who's doing it for me, right? So high touch principal versus agent is somebody who says, I can find you someone, don't worry about it. High touch principal says, I got this. As opposed to, like, we'll make a best efforts attempt at getting it done. The agent is an active participant in it. The principal is an active participant in it. Is CFA mock exam more difficult than the real one? I don't know. I haven't looked at the CFA mock exam. I saw in the CFA mock that they asked a question about strangle strategy, but there was nothing about strangle in your reading. I'm sure there was. Key difference between straddle and strangle. Straddle, put and call, same strike price. Strangle, spread them apart, different strike prices, right? Long strangle, short strangle. Brampton doesn't need Mark. You probably can't even speak Bramptonese. Bramptonese. I lived there for 3 years. But you're right, I couldn't speak. Mark, who bought it from you? Serify bought it from me. I thought that was common knowledge. Okay. This isn't level 3, but okay. Let's try to find the level 3 questions. Okay, what is your optimal learning sequence? Optimal learning sequence for level 3. I don't think there is an optimal learning sequence. Um, I would I would start with fixed income because it tends to be the hardest one, which means it takes the most time. And I don't want to be rushed on anything that takes the most time. If it's cognitively intensive, I don't want to be rushed because you can't learn in a hurry. And I would leave things like, well, private wealth management is really narrative. There's nothing to figure out. It's really narrative. I tend to leave that later because if I'm rushed for time, it's just narrative anyways, right? But I don't want to be rushed for time on things I got to work things I got to work through. Your recommended learning sequence on your site is volume 3 followed by volume 2. Can I do it pairwise? Keep things interesting. Distributed learning? Yeah, I do recommend distributed learning. A harden and easy, harden and easy, harden and easy. Because when you get bored with fixed income, maybe equity isn't that boring. Okay. Micro versus macro attribution. Can you please give an example of each quick? Well, micro attribution. Let's say I'm a stock picker. You've hired me as the small cap manager for your small cap allocation. You're the top down guy. You're the macro guy. You've done the allocation. I don't sector invest. So in other words, I'm not taking small caps and then picking my sectors and then picking my industries. I'm not working that way. I'm simply just a stock picker. So any allocation effect I have is purely accidental. It was never intentional. And if it's not intentional, I shouldn't be evaluated on my allocation. So if there were some decisions, oh, well, on your allocation, this was negative, my response would be, it's not what I'm doing. Right. So, that's the big difference. So sponsors usually are top down, usually have the allocation. Whereas when you get down to the fund manager, especially ones that are more active, let's say ones that, well, it would have to be more active, that are just more concentrated stock pickers. It would be really just selection is in describe question, just talking about characteristics, for example, describe what was LDI. You'll never get anything that asks you to regurgitate anything from memory. You'll never get that. You'll never get that. If you describe this and you're writing without reading what's on the screen, you'll never get that. You'll have a question, and to get your answer, you'll have to go, aha, there it is. And then you say, okay, you said this, it means this. You'll never be asked to regurgitate anything from memory. What percentage of level 3 exam is quantitative? I did this before. I think it was like 7% were calculate questions. This is when CFAI did let you see the real past exams. Doing a content analysis, I got to 7% on calculate. Let's see. I chose pay fixed, receive floating. So pay fixed, receive floating as negative duration because the manager believe rates are going up. And when interest rates rise, you want a lower duration. Yep. That's it. We want negative duration. A pay fixed swap has negative duration. Rates going up. I want to lower my duration. Pay fixed has negative duration. Call it a day. It's a full answer. Currently watching option strategy feel like it's much better than reading the curriculum, watching video afterwards. Can I skip reading material, at least some topic? Oh, I see. For level 3, the option strategy. Yeah, I cover everything. So when I do the notes for the reading, when I do the screens for the reading, I try to do it in such a way that I cover everything, and not everything. I mean, there's some paragraphs where you're going, wow, I don't need this. I don't need this, and you don't need this. And, but I try to cover everything. Will moving to performance analyst role from operations help me become analytical for investment role? Oh, well, I'm going to try to find just the level 3 questions here. I did determine, then case fact, then justified my case fact. Determine, it's this one. Case fact, that is why I chose this. Not justify your case fact, but use the case fact as evidence to justify your answer. And then that missing piece of why does this make you choose this, that missing piece comes from your head. This part comes from the story. Another part comes from your head, what you walk in the room knowing, and that ties it to the answer. Correct. What does fair value mean here in the context of currencies? Okay. Fair value typically means relative purchasing power parity. Most of the equilibrium models, I wouldn't even call them a model. Well, they sort of are. The concept of equilibrium for a currency is based on relative purchasing power parity. At least the most common one. I mean, there may be others. I'm not up on the literature on fair value for currencies, but it is some variant of relative purchasing power parity. Currency question on above would be helpful. Is there any consensus on what fair value? How would you do that? Sovereign wealth fund is most unlikely. Sovereign wealth fund is most unlikely used Norway model as per Q Bank. However, Canada model is not suitable for largest institution. I don't know. I don't know. I don't know what you're referring to in the Q Bank, so I can't really comment on that. Any question on how to approach level 3 ethics? Same way you did level 2 and level 1. It's the same code and standard. It doesn't change. It's the same. After clearing level 3, how can I remember previous stuff? Because that level 1, level 2 knowledge is quite useful. Should I take some time out every Saturday, Sunday to revise? No. Whatever job role you have, you'll go beyond what's in level 1 and level 2. You'll go beyond it. So I don't know that I would do that. How should we allocate assets between tax exempt, tax deferred, and tax account? I'm going to go ahead and skip that. You were all on. I think this is coming from people who were on the session in which I had enough of the question at one point. So I'm going to go ahead and skip that because I think I know what's going on there. Why does curriculum suggest we first withdraw from tax deferred up to first bracket, then from taxable? So any money that comes out of a tax deferred account, every single dollar is taxed. Every single dollar is taxed. But if you withdraw money out of your taxable account, it's really just your capital, right? I mean, if I go to the bank, if I make no income this year and I have a bank account and I pull $50,000 out of my bank account, that's not 50,000 of income. That's just my 50,000. So if every dollar out of a tax deferred account is taxed, let's take it all up to my first tax bracket, and then let me just take some of my capital back from my taxable account. Keep in mind, for your taxable account, you're paying tax every year anyways. It has nothing to do with your contributions or withdrawals. So when you take money out of your taxable account, that's not income. That's just you taking your own money back. Any suggestions for one day left of study before L3? Take some time off. Keep in mind, like the night before, you should not be flipping through pages. You'll only confuse yourself. Just, do a few sections or a few of the topics where you're not quite sure. Watch the video slowly, think it through, do it at that pace, and do what you can, and then let it go. You are here now. It's going to be what it's going to be. You're not going to make a huge, big difference now. Cleared level 2 in November. Haven't registered for level 3. Work full time. Do you think registering for August is advisable? No, nowhere near enough information to determine whether that's advisable. Meldrum last year's record for annuity sales. Could that explain the tight credit spreads that we've been seeing? Do we have any other level 3 questions here? No? Okay. Could that explain the tight credit spreads we've been seeing? I don't see how. For annuities? Um, Are annuities, are insurance companies taking on credit risk when are willingly taking on both interest rate and credit risk when they have annuities in place? I don't know enough about how insurance companies operate to answer that, but I'm not thinking so. Taking test Friday, do you think it's better I focus on formulas or review videos? There's not a lot of formulas for level 3. You probably review the formulas you need in 2 hours. So I think that answers itself. How difficult is the real level 3 exam compared to the learning ecosystem? Brutal. The real one is brutal. No, it's not. I don't know. I don't know the answer to that one. They don't let us see the exam anymore. Yeah, 12 hours for the exam. Yeah, at this point, relaxing. That's what you should be doing. Whatever I know, I know. Whatever I don't know, I don't know. Okay, well, yeah, that's it. Currency management. Say I'm Canadian investor holding US spot rate par. Forward rate 1.2. Expected spot rate 1.1. I know US is overvalued, so no hedge or under hedge. Well, you're Canadian, you're long US dollars, so you're going to have to get short US dollars if you want to hedge. You got a forward rate of 1.2. You're expecting the spot rate to be 1.1. I'd certainly be selling my US at 1.2, right? Because when I sell my US, I'm getting 1.2 Canadian, not 1.1 Canadian. But you're thinking that the spot's going to be 1.1. So you can hedge. If you over hedge, you're actually opening up an active position. So you'll be long some US asset, and you'll also be long the Canadian dollar at that point by whatever you over hedge, which is an active currency position. But I certainly wouldn't say no hedge. Okay. Have you seen level 3 2025 new material yet? I have. And that's all I can say. That's all I can say. I can't tell you anything about it. That's the deal we have. I could tell you I've seen it, and that's my poker face. Yeah, I've seen it. Any tips on dealing with a difficult personal life situation? Right when I have my exam, how can I have the right mindset? Well, the best revenge is living well. So, I mean, if you want to make her sorry about what she did, you know, the best response is living well. That's all. But I know what that feels like. I mean, I'm trying to remember back when I was mid-20s. Trying to remember if it was in the summer around exam time. I usually have a pretty good memory for that, but maybe my memory wanted to get it out of there. So you just got to lean into it. When you be able to tell us on May 16th. May 16th, I can tell you all about level 3 2025. Besides, you probably already know. I mean, they've telegraphed it quite well. Private asset stream. private wealth stream and portfolio management stream. They did telegraph it, but I can't tell you anything more than any information that you already have. I just can't share anything. Do you like the 2025 material, or you can't say that? It's all right. I mean, it's all right. I like the 2017 and 2018 material better. It was much more technical. I like that better across all three levels. Last question to follow up, CAD US case. How to determine to underhedge or overhedge? Well, let's say that you're a Canadian, you buy a US asset. What have you got? You've got a structured product, right? Think about it. You have two things bundled into the purchase. You're long the US asset, you're long an asset, and you're long the US dollar. So if you think the US dollar is going to get stronger, don't hedge. If you think the US dollar is going to get weaker, hedge. If there's a forward contract in which you can hedge, but you don't think the US dollar will rise above that, then hedge. So there's a couple of considerations to put in there. It just depends on whether you think the exchange rate will go up or down after completing fixed income. Can I work on PM or leave PM to the end? Well, fixed income is part of portfolio management. So there's portfolio management, which is really fixed income, equity, alternative investments. Then there's private wealth management. So there's wealth management and portfolio management. So fixed income is part of portfolio management. What's the difference between liquidity seeking and participation of volume trading? Liquidity seeking is, scanning a bunch of different exchanges, trying to figure out how much liquidity is in a certain bid. Participation is when you see volumes increase, you increase the volume of your trading. When you see volumes decrease, you decrease the volume of your trading. How is life in Costa Rica? It's good. Much more alive than Canada, although the culture is, that's a whole video on the culture. That's a video with videos. Let me tell you something. Just to bring you up to speed, since I've been here, I've been ripped off, scammed, lied to, threatened, and assaulted all in 60 days. And the assault occurred on my own property from the previous owner. Oh, yes. All in 60 days. And it's a lot of people telling you, don't trust that person because of this. And then that person comes to you, don't trust that person. And everyone's telling you not to trust anybody else. And I get it. I don't trust anybody. Well, I shouldn't say that. I've met a few good people here that I'm very happy that I've met. A few good people. Good so far. Good so far. But the culture is very different. I can't quite put my finger on it of what the culture is. But it's extremely, it's much different than what I expect in Canada. And the danger is in evaluating this culture based on your own yardstick. You can't do that. You have to first figure out the culture, and then you can measure people relative to the culture they're in, not your own culture, because that just leads to, these people, what's wrong with these people? Statements like that, right? But it's a different culture, I'll tell you. It is a different culture, but life here has edges. It has edges. So you can think, well, is it better in Canada? It's different in Canada. I've been thinking about it this way. In being here, I feel that I was in Canada drugged and numb to the human condition and numb to life because life has no edges there. Whereas here it's full of edges. You're just so much more alive. Everything is so much more raw and alive, but the human condition shows up a hell of a lot more. I'm enjoying the ride. I'm really enjoying it. I think the only thing left is a bullet to come flying through the window or something. I mean, that's a story to tell. I got shot at today. We'll see what happens. Not that I'm trying to get shot. To anybody out there thinking, hey, I can do that for him. It's not what I'm saying. Any opinions on continuing validity of popular equity factor models? Well, understand what a model is, right? A model is an abstraction. It is a way for us to tame the complexity of the real world. So we can't judge models by whether they accurately reflect reality. We can only judge models by whether or not they're useful, and they are still useful. To identify factors and to base portfolio construction and investing around factors is an extremely useful thing. So the models are useful. So I don't know that I would say they're invalid. No simplified model is valid. It's either useful or it's not. That's the metric to measure them on. How do you keep points added, subtracted to currency exchange rate straight? Ask bid points added to price base. Oh, it's not a matter of the price of the base. A currency is like, think of it like a stock. It has a bid and an ask. There's only one quote, and that's the price. That's the price of the base. So think about CAD over US, 134 or 135. What we're saying is that $1 US costs $1.35 US. What's the price of $1 of a US dollar? $1.35 Canadian. That's all it's saying. And there'll be a bid and there'll be an ask, and it'll be in Canadian dollars because the price currency is Canadian. And you add the bid points to the bid, the ask point, or the offer points to the offer. There is only one quote that has a bid and an ask. The base is always one. Having level 3 in August, cleared volume 3 and reading volume 2. It's also trade structure. So the constructive response questions in the EOC, in the end of chapter questions, are not structured response. They're open-ended. Discuss 3 reasons why you would do X. It's like, well, that's not a structured response question. They're not really that good. They're not really that good. So family accounts should be treated like any other account. Yes. Parents or brothers would be treated the same way. Yes. But wife account would not. Where do you draw the line? Ethics is not my strong suit. Not that I'm saying I'm not an ethical person, but the code and standards, I don't work with that every day. It's just not my thing. I would have to look. I would have to look it up just like you would, because ethics is just not my thing. Right? Learning Spanish. Sí, aprendo español. Going slowly, but I am. For retail traders, are there any key macro topics, concepts one should master for more efficient portfolio management? So many more questions to ask to be able to answer that. What is your definition of a retail trader? What asset classes do you play with? What's your holding period? Are you an investor? Are you a trader? There's so many questions to ask to determine what key macroeconomic topics or concepts you should be looking at. So many questions. How often and what time do you do live Q&A? I'm doing this one on YouTube because I lost power here for a second. Then I tried to get Vimeo to restart it, and it just wouldn't go along for the ride. So I said, well, I know a bunch of people have their exam in the next couple of days because it's the next couple of days. So I thought, well, I got to do something. I can't get Vimeo to get me a live session. I got to do something. So here I am, and subscribers and non-subscribers alike will benefit. But you got to do what you got to do, right? For an increase in rates, how do you think about whether callable, puttable, or option-free is most attractive? Well, think about what's going on. What happens when you increase rates? Prices go down. So if prices go down, do you care about a callable bond? You're short the call. You don't really care. Straight bond, you're going to lose value. But if you have a puttable bond, well, the put starts increasing in value as the price goes down. Just use logic. You'll get there. So the puttable bond, but you can't buy something after something happens and expect to benefit from the thing after the fact. You must be in something before it happens. So if you're anticipating a drop in rates, if you can find puttable bonds, sure. But if you're anticipating a drop in rates, why not just lower duration? Why look around for a puttable bond? Why not just lower duration? What would maybe that question on family accounts have to do with the fact that there might be spousal privilege? If I'm a Canadian investor in Canada wanting to buy US stocks, CAD is down versus US, yeah. Now convert to US. How do I hedge if I'm buying the stock for long term versus short term? So the Canadian was low, and you bought the US. You have a US asset. So you would be hedging against the US dollar dropping and the Canadian gaining strength at this point, I imagine. That's what you don't want to happen, is the Canadian dollar to gain strength against the US. Well, it's easy. Think about what you have. You're in Canada, and you're long the US and you're long the US dollar. And you're long the US asset and you're long the US dollar, and you only want to be long the US asset. So if you're long the US asset, long the US dollar, you must open a position that is short the US dollar. So the short US dollar, long US dollar cancel out, and you're long the US asset. Foreign rate is higher than domestic rate. UIRP says for currency, it's expected to depreciate. The lower yielding currency or the higher yielding currency would depreciate. In reality, UIRP does not hold. Correct. And we see capital flows attracted the higher rate. Correct. Is the currency expected to appreciate or depreciate? You tell me what theory, and I'll tell you whether it will appreciate or depreciate according to the theory. So there's theory that says, oh, it'll go up. The exchange rate will go up. And there's theory that says, no, it'll go down. Pick one. They're both there. Why? Because currencies are a random walk. So you have a whole bunch of competing theories when it comes to currency, because who knows? Flip a coin, right? So UIRP says the weaker performing currency will strengthen. The carry trade says, no, the weaker performing currency will continue to weaken. And we actually see a carry trade. Whereas we know almost to a point that UIRP does not hold. Yet it's a theory. Is it useful? No. That's a senseless theory, especially one that's not useful is a senseless theory. Can you please explain when you would enter a reverse repo in relation to the yield curve? Well, first of all, the reverse repo, all repos are money market are either money market loans or money market securities. So if I'm doing a reverse repo, it's because I got cash and I can't find a money market security. And I'm looking for a 15-day money market security. So I go into the repo market and I'm looking for a 15-day repo. So I'm going to give my money and I'm going to hold the security as collateral. And then in 15 days, I'll get my money back plus the repo rate, whatever it happens to be. So who cares about the yield curve? At that point, all repos are money market securities. Shouldn't say money, are either money market loans or money market securities. So it wouldn't matter. Economic theory answer or reality? Well, the question may say, according to UIRP, then you have to answer it according to theory, so the question will tell you how it wants to see an answer. To do hedge, do I buy an inverse US ETF option or US? Just use a futures contract. What do you think is the least expensive way to hedge currency? Futures contract. And use the least amount of capital. Futures contract. Yeah. I find topics in private wealth reading to be the most difficult because I just can't keep my eyes open. They're boring. Should I spend more time on that one at this point? Exam is tomorrow. Boring. I will say that. Private wealth management is bloody boring. Nothing exciting going on there. There are people who do this for a living. Get in a conversation with one of those at a party. But yeah, there are people who do that for a living. But yeah, it is quite boring. It is quite boring. I'm with you on that one. I don't know what to say on that. You could try reading it again, but if it's boring, it's boring. It's not going to get more exciting, but you can try to bring excitement to it. I have trouble managing time when writing constructive response questions, especially when writing answers involving calculation. Can you provide suggestions on how to write these answers more efficiently? Every answer is less than 20 words, period. You're just writing too much. Every answer is less than 20 words, 2 bullet points maximum, really. You're telling the greater the answer, you're not teaching the greater the answer. They're not essay questions, they're structured response. Explain seagull spread and when you want to use it. Well, think of a collar. And you're long the put. So you want that for free, so you sell the call. Which means your stock can only rise so much and it'll be called away. So you don't have a lot of upside. You'd like to have a little more upside. So what you can do is you can move your call a little bit higher and sell that call, but it's still going to cost you something for the put. But what you can do under your put is you can go down in price and strike price and sell a put. So by moving the call higher and then selling a put lower, the combination of the two pays for the long put. How do you interest the error term for factor equity fact? How do I interpret the error term for factor equity? The amount of the return unexplained by factors. Look at what level it is active, concentrated stock picking. Even if you have 2%, is that concentrated stock picking? I don't know what you mean by the 2%. The error term, an error term in any regression is what is unexplained by the variables, by whatever independent variables you have. So if you have 3 factors, your error term is everything else. It is, as was explained or as was described some time back, the measure of our ignorance. In other words, we we think these three things are causing the returns, but here's the error term. It is the measure of what we don't know. It's like, if only we knew something else, you know? So, yeah. What are your thoughts on answering multiple choice first and going after SR? Yeah, I agree. What type of variance, covariance, variance, covariance questions could be asked? I don't know that. Not many, I think. It's sort of a specialized topic, and it misses the point of other big themes in each reading. For calculations on constructed response questions, should I write out at least the first step for the formula in case if I'm wrong? Yeah, so don't use notation. Just write all the variables in place equals. You don't have to show all the steps of move this to this side, divide by this, simple. You don't have to do all the simplifying steps, just all the variables in place equals. If you want to show that first, what variables you used, put them all in place equals answer, done. Yeah. And that is the end of the questions. Look at that. Good. All right. I think we got everyone done. Delete some emails. If the Sharpe ratio for segmented market is not given, can I use the Sharpe ratio of integrated market? Typically it should be given. If it's not, you'll have some wording that says assume that the Sharpe ratio of the fully segmented market is the Sharpe ratio equals the Sharpe ratio of the global market portfolio. You'll have some sort of language that says that it's equal. Shouldn't be equal. They shouldn't. I mean, right? They shouldn't. Just thinking about it logically. But for simplicity reasons, they might say assume that they are. Any words of encouragement for us? So there are two ways. There are two ways that we can think about a statement like that, like words of encouragement. Putting something in front of you that you run towards or that you reach, or putting something behind you that you run away from. I think it's probably more motivating, and you're probably more motivated to run away from something than to run towards something, which explains why ambition really only infects about 10 or 15% of the population, because you have to run towards something. So here's my words of what was the word that you were looking for? Encouragement. Ask yourself this question: do you want this to be the second last exam you write? Right? I mean, think about this. This could be your second last exam. You don't want that. You should be thinking, I don't want this to be my second last exam. And then whatever time you have, you lean into it. You just lean into it and give it all you got. Empty the gas tank on this one. Whatever you have in you, now's the time to leave it all on the field, right? Because you don't want to play the game again. You want this to be your second last exam. Write that down, put it on your mirror. I don't want this to be my second last exam. And you'll lean in. Coffee at night. It's not coffee. It's Coke Zero. I don't know if you can see it. See, it's Coke Zero. Yeah. I drink Coke Zero at night. Not coffee. No way. I just put it in this cup. because I lost my dog 2 years ago, and somebody gave me this for Christmas, and I never used it. Now I've decided to use it because my little fella's on there. When computing the return in domestic currency, the return on asset in foreign currency will have which currency in the denominator? If you're looking at the currency, what currency to use, your domestic currency must be in the numerator because it's the price. You must multiply it. You'll have one asset that's denominated in the foreign currency, and you must multiply it by something that gets it back to your price, right? So your currency would have to be in the numerator. Is there any free source to study CFA level 1 for RP? Yeah, if you go to markmeldrum.com, the 2018 level 1 is there for free. Call ratio backspread, good strategy for NVIDIA considering it has results coming next week. I don't know. I haven't looked at you have to look at where risk is, right? NVIDIA is one of those stocks, if it misses by a penny, you've seen this before, it misses by a penny and it gets destroyed. However, I did talk about NVIDIA on earlier this week. With the forward PE of 37, that's assuming that it can keep its quarter-over-quarter growth based on Q3 to Q4, based on its guidance, that it can keep an 11% quarter-over-quarter growth, which is 50% a year. Assuming it can keep that, it has a PEG ratio less than 1, which not many stocks have a PEG ratio less than 1, which actually makes it one of the cheapest stocks out there in terms of growth. That makes it one of the cheapest growth stocks out there if it can maintain that growth, if it can maintain it. China doesn't want NVIDIA's geared down chips. It doesn't want its cheaper chips, which is why the growth rate sort of, was only 11. The forecast, the guidance, is it? What if it's only 9, right? Like one slip, one number coming in light, it could get punished, or it could be the next hope stock, right? Tesla still is a hope stock, that even with growth rates declining, even with margins declining, even with lawsuits mounting, even with negative sentiment building around the CEO, it still maintains a multiple because it is a hope stock. That if NVIDIA is a hope stock, any stumble might just be seen as, well, every stumble Tesla made was actually bullish. It's lowering prices. That's actually bullish. Margins are coming down. That's actually bullish. I mean, the Teslites would tell you that everything Tesla did was bullish. Its whole factory blew up. That's bullish. So it could be the same for NVIDIA, in which case, the downside would be limited. It had a big run though. I mean, last 30 days, 550 to 7. Where are we? 737 as of today. I mean, these are big moves in front of an earnings report. I mean, they'll either make it or they won't, right? Excuse me. How do I remember the phase of the business cycle and its implications? There's an exhibit. I think it has like 5. Excuse me. It has like 5 criteria for each one, 4 or 5 criteria. I would just focus on that exhibit. And if you don't work with this stuff, that's probably a memorization thing for you. How do we determine investors following a contrarian strategy? Usually their portfolio will have long and short positions. The long positions will more than likely be out of favor stocks. The short positions will be in favor stocks. So they sell when everybody is buying, and they buy when everyone else is selling. What are the chances of Gibbs being SR? It has been. It has been. How do you know whether to use bid or ask for two currency hedging and rolling the hedge? Midpoint. Never the bid or ask, midpoint. Midpoint. In your applied series, you show hedging currency, shorting the spot. Can you explain why you did that versus using the futures? Because what if you only have to hedge out $15,000 or $20,000? Futures contracts are chunky, 100,000, 125,000. They're big. You might not have 100,000 to hedge out. The spot has an interest rate that you have to pay. It's a little bit more expensive because your broker is not going to give you the real interbank rates. You're going to get a difference on each one. The futures are more efficient because the broker can't set the interest rate. You get the interbank rates in the futures contracts, but the spot doesn't have that. So it's a bit more expensive to do. But if you're only hedging out 15,000, the futures contract is overkill, right? And showing you how to do it with the spot, it can be done. So I may as well show it to you because it can be done. Doesn't mean it should be done, but it can be done. And if it's just a small amount that you're hedging out, mark it up a lot post earnings, keep dollar cost averaging or hold cash. I just think there are better stock specific strategies to follow. The latest interesting one I think is AT&T. It's not going anywhere. It's not going anywhere. It's not going up. It's not going down. It's not going anywhere. 6.5% dividend, and you can double that, which would give you a triple dividend. You can double that with the options because it's not going up. It's not going down. It's in a very tight range. These like AT&T and Verizon are they're not really going anywhere. Beautiful, right? So something like that is a 20% a year stock, even though it's not going anywhere. Oxy is a beautiful stock for selling puts on. GM is another great one for selling puts on because I don't think they're going to stop doing stock buybacks because the market is not going to start showing them any respect. Mary Barra made way too many mistakes, but they're not going to get rid of her because you can't fire a female CEO these days. You cannot do that. So they are stuck with that one. Now, I'm not saying she made mistakes because she's a woman. She made mistakes because she's human. And she misjudged the strategy. She just happens to be a female human. And in today's climate, you can't fire a female CEO easily. That's a tough thing to do. But she's part of the problem of GM. Where has GM gone under her leadership? Nowhere. 2 years ago, when automation was all the rage, Cruise would have IPO'd at almost 50 billion, more than what GM is worth, and didn't do it. Now it's worthless. I mean, they basically pulled the funding on it. Now it's worthless. So it's not going anywhere. But to get their bonuses, stock price has to go up. The only way to do that is to buy back shares. And they did a 10 billion accelerated buyback. They won't get respect from the market, which means they'll do it again. So selling puts on GM whenever it drops into the 37 range, I think is a good idea. So these are good ideas. without having to worry about dollar cost averaging. I have no opinion on beta right now. I really flip a coin, I think. Um, what, according to you, is fair L3 MPS? Mid to high 60s, mid to high. What's the best miner for a finance major looking to go far in this industry? Best miner. Finance, I combine it with either economics or accounting, I think. Economics, I'd probably lean to more. Buy T and sell options. Yes, that's exactly it. Basically, institutions use futures since they're more efficient and larger. Institutions probably use forwards. Their positions are large enough that they can just use a forward. A forward for maybe 60%, and then or maybe 80%, and then use futures to adjust their over or under. Please explain the important gender diversity as a socialist component of ESG. Yeah. It's not important. Is the next era in a similar bucket? Utilities underpriced? Yeah. Consider revenue growth to support EV? Yeah, I think selling puts on the XLU makes a lot of sense. If you don't want to pick a particular utility, XLU is the utilities index, good dividend yield. Yeah, I agree. No, odd that there are no calculate command words. There are very few calculate command words, very few. Not that there aren't any, there just are very few at level 3, very few. I don't think that calculate will make up more than 5% of all your marks. I'm a little confused with the relationship between empirical duration and effective duration for IG and high yield. Is there a rule for when empirical duration will be larger or smaller? So effective duration is theoretical, right? It's just a theory. It is our best estimate for the percentage change in the price of a bond for a change in yield. Bonds don't always change that way. Number one is because parallel shifts of the yield curve are extremely rare. Like a full parallel shift is extremely rare. So you're not going to get you're not going to get what effective duration says. You get something else. That's empirical duration. Now, effective duration measures the percentage change in the price of an interest rate sensitive security due to a change in interest rates. I said an interest rate sensitive security. I didn't say a bond. Interest rate sensitive security due to a change in rates. If you take a corporate bond, the price of the bond can also change because of changes in credit spreads, even if interest rates do not change. The CFA books take the view that all inflation is demand driven. They mention supply driven inflation, but then they say it's very rare and relationships are messed up, so we're not even going to go there. They take the position that all inflation is demand induced, which means the economy is moving. When the economy is moving up, demand induced inflation shows up, interest rates go up, credit spreads tend to drop because the economy is doing better. The credit spread overweighs the increase in the interest rate, thereby making the yield on high yield actually shrink, but the yield on investment grade actually increase. So high yield bonds behave more like equities, investment grade bonds behave more like treasuries. So the empirical duration, what actually happens, is much closer to effective duration for investment grade, but empirical duration is very low, almost non-existent, very low for high yield bonds versus effective duration. Because the credit spread more than either completely offsets or more than offsets the increase in the interest rate. Math, stats, comp, sci, or econ. Math, stats, computer science, or computer science, forget math. there really isn't that much math in finance unless you're really going into financial engineering, but there isn't really that much math in in a more applied sense. Stats, no, I think beyond a good general understanding of an undergrad stats course, I think that's all you need. Comp sci or econ, I'd be equally split between the two. Which three topics would you say are the hardest? Fixed income, capital market expectations, and derivatives with currency management. Easiest, private wealth management, equity, probably ethics. Ethics is easy because there's nothing to figure out. It's just a memorization thing, right? I didn't check the case studies. How important is it for the exam? So all I can tell you is what CFAI says. Everything is fair game. If there's a learning objective, it's fair game. That's all I can say. Beyond that, I have no idea. There is new learning in the case studies. There are learning objectives. There are things to learn, but that's about as far as I can go. I don't want to say it's not important because, well, what if it is, right? Thoughts on TLT, long bonds reaction to inflation numbers, overdone? Yeah, I think it's overdone, but I think TLT is still a good for selling puts at the 94 to 93. Now I know it's below that right now, but that's where that's where the premium is, selling it at the 33s. I just don't see the downside from here. I don't see a continued bear steepener on the curve because we know the Fed is going to lower rates. They said they're going to lower rates. They said 3, markets got 4 priced in. I think we're as close as we can get here. So I don't know if it's I still have my heavy duration position. I'm not getting rid of it. Struggling with overall quant for CFA and in generally what you use in applied level. I don't use a lot of quant in the applied level. Overall quant for CFA. The quant is not very difficult at all. It's not very difficult. But I don't use a lot of quant in the applied level. But there's a lot of good YouTube channels. You just have to type in, one of the titles of the readings, and you'll find lots of good stuff on YouTube. Say you want to hedge currency for a year with the futures. Would you use 3 months and roll it? You would use the 3-month and roll. Exactly. You would use the 3-month and roll. Here's why. We know that rates are coming down. Let's say that it was liquid out to a year. And it was using the current 1 year. Well, it would use the current 1 year rates. But we knew rates were coming down. Well, you entered a futures contract at the higher rates, whereas if you roll it over every 3 months, you basically have a floating rate on the way down, right? So if you're selling, on the other hand, you probably want the higher rate. Maybe you do want to lock in longer because you have positive carry of your selling, so why not get excessive positive carry? I just don't think you're going to I just don't think you're going to be that liquid out 1 year. Yeah, so I think that you're probably 3 months at a time or even 1 month at a time. but I just don't think it's liquid out to a year. They're listed, but I don't think it's liquid. Follow up on TLT. It's price and interest rate. Is there a mathematical relation? Well, you can look at the duration of TLT. You can look at the portfolio. You could say, well, it's a portfolio of treasuries, really. Like 99.8% of the portfolio is U.S. treasuries with a duration of, I think, 16.5, 16.6. So you can think of it as a portfolio with a duration of 16.6, and you could say, well, that means it should increase in price by 16.6% for a 100 basis point drop in yields. Because it is basically a fixed income portfolio. Please do a session on level 2 and please confirm the date and time. I don't do the level 2 anymore. I'm a level 3 kind of guy. What kind of quantitative questions should I be aware of from the credit strategies? Well, they really went out of their way on the CDS pricing. Duration times spread, they kind of threw something in there a couple of times. Expected excess return, the excess return, expected excess return. Ooh, 1023. Our Eve Hills bitches. I don't know who that is, so I don't know. If you had to rank, what's the single most impactful reading topic to have draw down for level 3? Impactful in terms of the single most important reading for the exam, or to know? I don't know that has an answer. I don't think it has an answer. With home prices falling in Canada, how exposed do you think banks are? No, not very. I don't think they're very exposed at all. With what has been reported by Canadian Real Estate Association, Toronto had 37% increase in volume in January. Canada had 22% increase in volume. I don't know that, and with a population growth that far exceeds home growth, I don't see that falling prices are going to be a thing for Canada. Appears I'm unable to buy the Canadian apartment REITs you mentioned since it's listed on TSX. Yeah. Available OTC tickers seem extremely liquid. Any suggestions? Switch to interactive brokers. That would be it. If your broker can't do it for you, it's your broker. How do you determine liquidity? Is it just bid-ask spread? Yeah, pretty much. I mean, the higher the volume, the tighter the bid-ask spread becomes. So usually the bid-ask spread can proxy a lot. And if you take the spread and divide the spread by the price, you get some idea of the percentage of the price that the spread is. The higher the percentage, the greater, the more illiquid you can make the conclusion that it is. Current economic outlook, any macro risk post? I haven't really thought about that too much. A proportional relationship between prepayments and catch-up premium for agency. I did analysis ranging from 2023 to 27, but catch-up premium shows no direct or indirect relationship with prepayment. Off the top of my head, I don't know without reading that section. Is computing drawdown percentage and duration testable? Not really. Not computing duration, no. Okay, that's not. Does your answer mean that when credit spreads narrow, high yield can be thought of as moving down, and corporate bonds yield can be thought of as moving up? Yeah, the yield on high yield would drop. The yield on investment grade could increase. Yeah, the high yield would act more like an equity. As it relates to expected return for factors affecting fixed income returns, which are only three factors. With an upward sloping yield curve that will remain static, is roll down return calculated using fewer periods only or fewer periods and lower IR? Well, it's the fewer periods only is the pull to par. You do have a change in yield. You do have a lower yield. So you can do it in two steps. In your time value of money keys, change your N, compute your PV, then change your IY, compute your PV. You have the first PV will be, you move from the original PE to that PV is the pull to par, and the move from the original PV to the next one, less the pull to par, is the roll down. But you're going to get a pull to par. Can you please explain your approach when you face essay questions, and what are the do's and don'ts? First of all, on this exam, there are no essay questions. There are no such thing as essay questions. They are called structured response. Those are not essays. Those have the response has a very particular structure, hence structured response. And it's one or two bullet points, period. With essay questions, there are no essay questions. Being split across the AM and PM. Does one change the prep strategy? Not really. If interest rates are declining, which would be a better receiver swaption or buy call on bond futures? I don't know. That's not enough. That's nowhere near enough information for me to make any kind of determinant. What kind of receiver swaption? What's the fixed rate on the receiver swaption? How much the receiver swaption cost? Any chance on selling more hats? No, I don't think so. What's the distinction between buy and hold and rolling down the yield curve? Well, buy and hold is buy and hold it, to maturity. You're going to get the higher in an upward sloping yield curve. You're just deciding to go for a higher yield. Riding the yield curve, that's only makes sense if you plan to sell the bond before maturity. Because what's the point of riding something to end up at par? I mean, what's the point of, let me find the steepest part of the yield curve. I'm making money. It's, no matter what happens, that bond will be pulled to par the closer it gets to maturity. So all your gains can be taken away. So if you're riding the yield curve, it's buy and sell as opposed to buy and hold. Buy and hold means I'm going to get the higher yield. Good. Riding the yield curve is let me get the higher yield and let me get the increase in the capital gain from a lower yield one period later. For currency hedges, do you buy on the spot to close the hedge? Well, depends if you were short or long to hedge. If you were short or long the futures, typically you're short. It's a forward, not a futures, right? It's a forward. If they were futures, who cares? These are forwards. So the dealer has laid that risk off on someone else. So money has to be delivered at some point. You want out, money has to be delivered. But buying, it's when you have to buy and you have to sell, you're really just, it's just the differential in the currencies that is the cash flow. It's netted out. But if you look at an accountant, how an accountant would do it, there'd be two separate transactions. However, it's with the same dealer, it's just netted out and you pay if the forward was in the money, you'll get money. If it wasn't, you'll pay money. And then you just put a new position on. Barbell versus bullet, what's favored for more curvature and why? For the same duration. If you're getting more curvature, the middle part of the curve is doing this, right? Middle part of the curve, rates up, you want to be short. If rates are going up, right? So you don't want the other part of the curve on a relative basis would be lower on a relative basis. Keep that in mind. So you'd probably want the barbell, not the bullet. Largest hindrance to passing level 1. I never feel I have enough hours to master it. Well, it's self-study. A lot of people don't do well with self-study. A lot of people need structure, very strong structures, and you don't have that structure. You have to create your own. That's the biggest reason. Second is underestimating the sheer size of level 1 and not giving enough time and dedicating enough time to it. If you were to buy an option, do you put a limit order in at the midpoint? Fill it at the ask, use option pricing model. I never use an option pricing model. I never bother with fair value because if I'm going to do fair value, I need some estimate of volatility. Well, I'm just making a number up at that point saying, okay, well, I can observe everything else. Volatility. I'll say it's this number. I can say it's that number all day long. But the market has its own idea. The market will have a bid and the ask. It doesn't matter what I think it is. If I want in on it, that's the bid and the ask. Period. I don't get to pick my own implied volatility and say I'm going to go with this. For an OTC option, then you're going to negotiate around the implied volatility. So I guess to answer that question, where'd it go? I just lost it. Oh yeah. I just decide. I just look at the price action of the underlying, and if it looks weak, and I want to sell a put, and let's say the put is $1.23 to $1.26, and I want to sell the put, I might put in, looking at the stock, I might say, okay, it's weak today. Let's put in a 130, and then wait for it to get to 130. I might, but if I want it right away and it's a tight spread, I don't mess around with being in the spread. Just grab it. As it relates to my question on expected return from before for fixed income portfolio, I'm having trouble differentiating between roll down return, and expected change in price due to investors. Okay, so the roll down return, how the book presents it is it collapses, pull to par, and roll down return all in the same one, all in the same calculation. And then you might say, okay, well, the curve looks like this, and I expect to roll down here, but I also expect the curve to drop. So there's my change, right? I'm here. I'll keep my finger here. There's my change. So again, I was here, roll down, expected change, if you get that. Have you looked at Disney at all from a company perspective? Not really. No, not really. When a bond has negative yield in an upward sloping scenario, why will the roll be negative? They have negative yield, a negative yielding bond on an upward sloping curve. How can that be? So if the yield is negative, if we have the yield curve, like instead of doing this, one point would be below the horizontal because yields on the vertical are positive. So how can you have, you'd still have an upward sloping curve. You'd have, well, it would kind of be U-shaped, I think. Let me think about that. Let's say the 5 is negative. It would have to be inverted at that point because as you get closer to par, it cannot help but have, at the worst, zero yield. So it would be inverted to the point where it's negative. It would have to be inverted. Yeah, so that you'd be rolling up. And if you're rolling up, of course it's negative. That would be a negative return or negative roll. Yeah. On a bond, okay, I'll read that. Upward sloping yield curve, does the lower, don't say interest rate, yield. Does lower yield correspond to expected change in price due to invest? No, on an upward sloping yield curve, if you're here and a year later you're here, that is not a change. That is not the investor's change in the yield curve. That is just a static yield curve. You just got to the next yield. This would have to change like this to be an expected change. If I was dynamically hedging and I was over hedged by 50 million, I would buy on the forward to bring the hedge in line, but in level 2, we would sell the forward to close the transaction. You're confusing a lot of things there. First of all, you're saying hedging, over hedged by 50. I don't know what that means. I don't know if you're long or short. So you're saying you're buying on the forward. Well, okay, so that means you're short, you're buying. We would sell the forward to close. So yeah, I think you're just mixing up a whole bunch of points because I don't understand. I'm not following that. I came across many posts and stories of CFA worthiness. What are your thoughts for a student came out of university with finance degrees and interested in risk, equity research, and AM? You're not going to get me to say anything real negative about about CFA. So, I'm kind of the wrong person to ask on this one. So it's like asking a nutritionist, what do you think about a low-calorie breakfast? You're not going to get to say anything negative about it. Short seagull spread was mentioned in the currency reading. Can you clarify when we'd use that? Essentially a bear put spread plus covered call. There you go. You use the seagull spread when you want the long option for free, but you just want a wider upside on the currency than selling a call too close to it. Difference between roll down return and rolling yield. Rolling yield includes the coupon. In your personal portfolio, do you feel that most of the returns from options comes from selling? Yes. Favorably trending markets. Would you trade with higher or lower urgency? Probably, well, on a relative basis, more urgent than not urgent, but not fire truck, get out of my way urgent, but probably with more conviction. I wouldn't use the word urgency. This is a question of CFA mock exam. Would that mean buying in a falling market and selling in a rising market? Favorably trending. Favorably. Falling market is not favorably unless you're a short fund. What is the practical application of key rate duration? Well, it's just saying let's say that you expect the 10-year yield to change and only the 10-year yield. How much would my portfolio change if only the 10-year yield changed? That's all that is. Um, what is the practical application of it? How much would my portfolio change if the 10-year changed? It just answers that question. How best to compare option prices across stocks? On implied volatility, usually. Determine which stocks are expensive, cheaply priced. Mm. Mm. Well, I think you're messing some things up there. You want to compare option prices to determine which stocks are expensive or cheaply priced. I don't know that an option price will tell you whether a stock is undervalued or overvalued. So I don't know. I've not seen option prices being used to conclude that a stock is overvalued or undervalued. How do I decide what option to buy, sell for income, income December duration? Which option to buy, sell for income December duration? I have no idea what you're asking me there. I have no idea. Thoughts on difficulty on FRM versus CFA if same study method is used? Are you quantitatively inclined? Easy. Are you not? Hard. That's about it. How would you deal with a company with high debt ratio and a massive currency? How can a company have a massive currency depreciation? A massive currency depreciation. How can a company have a massive currency depreciation? Or you're saying it was in a country with a massive currency depreciation? Well, was its debt local or? I guess I don't understand what you're asking me here. Yeah, I don't know what you're asking me. I mean, stock options, cheaply or expensively priced. I would look at the deviation between implied volatility and actual historical volatility, and the wider they are, the more they'd probably be overpriced. IV is biased in that it tends to overstate actual volatility. If credit spreads widen for corporate bonds when interest rates increase, why is I didn't say they widen, I said they shrunk. Interest rates go up, credit spreads contract, not widen, contract. What are the key points to be made aware of for floating rate notes? I don't know what that means. Like, what do you mean by the key points to be made aware of? I don't know what that means. Formula that includes floating rate note. I still don't know what that means. It seems like you're answering your own question here. I don't know what you mean. That's too vague a question. It's like saying, what are the key points to remember as I turn 40? And what do you mean, right? I don't know. How do I decide what option to buy, sell to increase, decrease duration and convexity? Options have positive delta, which means you'll get positive duration. Puts have negative delta, which means you'll get negative duration. And buying a call and buying a put both add convexity. Do you have any opinions on? No. Flex options? No. No. Is it a waste of time to pick stocks on the Mag 7 are up 30%, make up 30% of the index? I don't think it's a waste of time to pick stocks. No. For instance, last year, if you had picked the home builders, you outperformed almost every stock out there. Some of these home builders, 80, 90, 100% over the course of the year. No one's talking about that. No one's calling it the Magnificent 15 by throwing in the 8 home builders. No one's doing that. Meanwhile, some of the home builders tied or even beat some of the Magnificent 7 in their performance. No one's talking about that. So yeah, I think it's always worth picking stocks. So do you think large volumes of passive ETF investing could work against the efficiency of markets and allocating capital? Well, yeah, it is possible. It is possible. How do I approach fixed income for level 3? Carefully. Sneak up on it. Don't let it see you coming. I think you approach it like you approach any of the other topics you've been at level 1, level 2. It's really no different, really. How do we prepare for the AM session right from the start or closer to the exam? Get the knowledge in your head first. Do you think that the large? Oh, I already read that. Studied well and genuinely interested in the topic. Feel okay with most of what the books are talking about. However, I don't feel like I know everything perfectly and very easily. Is that normal? Yeah, I don't think that's abnormal. I can't expand on that any more than that. How to analyze FFR and SOFR spreads and butterfly for trade. Why butterfly? What's this fascination with the butterfly? Like, what's the point of it? The more complex something is, the more I find the more useless it is. It's just, I don't understand why. I had a couple questions on butterflies. Who cares about it? Like, don't get a strategy in your head and think, where can I use the strategy? The strategy usually is a result of some setup. I wouldn't focus on, I want to use a butterfly. Where can I use a butterfly? But I did do FFR and SOFR in the applied series. I did do those. Company with high debt nominated in U.S. in a country facing massive currency depreciation. How can the debt be restructured? Well, what are they doing with U.S. debt to begin with? They must have U.S. investments somewhere or generating U.S. dollars. Why would they issue U.S. bonds unless they sold U.S. and bought their local currency? In which case, why wouldn't they just buy in their local currency? And if they did do that, why would they not have hedges on that currency? And if they did do that and they don't have hedges on the currency, they don't deserve to be restructured. I mean, if you're taking on non-domestic debt, number one, and number two, not hedging out any of the risk of that non-domestic debt, management they don't deserve anything more than that. So why would you even bother? Restructure fire management. Maybe not always in that order. What is a forward rate bias? I'll pass on that. Why do you sell convexity on a parallel shift in the yield curve? You don't. SMCI trade caught in a short squeeze, sold the $1 put, sold the one put at 240 strike, sold one call at 640 strike. Stock was trading at 420 after appreciating more than 100%. I'm going to skip all of that because I don't know how to answer. I'm not familiar with the underlying, so I simply can't comment on it. Interest increase while credit spreads are widening. Okay, so you're giving me a setup. Interest rates are increased, credit spreads are widening. All right. The answer is empirical duration will be great. Yeah, the price will change by more than effective duration because the price will change because interest rates are increasing, but credit spreads are widening. So the yield is increasing faster than interest rates are increasing, and effective duration only measures the change in price for a change in interest rates. So the empirical duration, what actually happened is the price dropped by more than what effective duration would say, thereby making empirical duration greater than effective duration. Yeah. Is the L3 time constrained still with the change in, is the L3 time constrained still with the change in structure? Don't know what that means. Is the L3 time constrained still with the change? Is the time constrained still with the change? Is the L3 time constrained still with the change? No, I don't know what it means. What else should I be doing here? I didn't read that. Do you have a wife? Are your students your family? Yeah, pretty much, yeah. Can you explain the mechanisms how a central bank can support its own currency by having a large foreign currency reserve? Well, if it has a lot of foreign currency reserves and it needs to support its own currency, it can always sell the foreign currency and buy its own, right? Until it runs out of foreign currency. When do you do a synthetic short for a credit? Anytime you want. I don't know that there's a time to do it. It's just your put is in the money when you're doing the synthetic short. Your put is in the money at that point. I don't know that there's a time to do it. Is it better to choose the front month or the longer maturity contracts for shorts, for synthetic shorts? Well, depends on the combination of the dividend and the interest rate and around what forward price the 50 deltas are centered, because they'll be centered around the forward price. With high interest rates, I don't think it matters, I guess. High interest rates, if you did shorts and roll them over, with dropping interest rates, it might be better to do it that way, because with dropping interest rates, because you're selling the put price would increase. So yeah, probably shorter periods of time rather than longer. For a parallel shift up in rates, why do we prefer callable over option free? Well, with the callable bond, you are short the call. So as rates are going down, the bond price is going up, and the call is shrinking at the same time, and you're short the call. So you're making money from the bond, and you're making money from the call, or you're making return at least from both. Will you get back to traditional format of market outlook Q&A once you're back? Yep. Do we need to know the minimum variance head ratio for current curriculum for level 3? I don't know how to answer these questions, because CFAI is, whenever you ask these questions, are very, very plain and straightforward. If it's in an LOS, it's fair game. So if it's in an LOS, it's fair game. That's all I can say is, if it's in an LOS, it's fair game. It just seems like such a small little thing in the corner of a reading, when all the readings have bigger themes, that I don't know that I would be too focused on it. It was in a Boston mock. Oh, no. I don't know that I have too much of an opinion on that. Okay, 10:57 on this side, which makes it 11:57 back home. Well, where I used to be. So I'm gonna end this one. My question was, with the structure response mixed in both AM and PM, is there more time? That's how that was the intention of doing it, is so that you would come up. No, there isn't more time. There's still 4 hours and what, 4.5 hours. It's just people ran out of time on the structured response, but had plenty of time on the vignette. So why not interleave them? Why not mix them so that the extra time you had on the vignettes can now be used for where you were short time? So you come up not so much with extra time, but extra budgeting, extra time to budget within the time allotted. Yeah. Okay. I'm going to get going here. I've been, as you can see, yawning for a bit now, and I'm tired. Okay. I will see you guys later. Ciao. End stream. There it is. End.